The S&P 500 has just recorded a brand new high, resulting in the fastest ever recovery during a recession. However, this may look fantastic on the surface, but 60% of the companies within the index are still down for the year. There's companies within the index that are down over 70%. So how is it possible that the index can be up at such a fast rate? What is going on, guys? It's Thomas here, and today we'll be discussing the statistics behind the S&P 500's brand new equity high and how it's possible for the index to be up during the current situation. So just a quick summary of what the S&P 500 is. So the Standard & Poor's 500 tracks the top 500 largest companies publicly traded within the United States. So it only covers those largest 500 companies, and it's typically used by investors to give a good summary of how the market is tracking at a whole. Over the last 20 or so years, companies like Vanguard have also released funds which are exchange traded and allow the typical investor to be able to invest into the S&P 500. So it basically allows you to buy a basket of those top 500 companies and then invest a little bit into all of those 500 companies. So the S&P 500 is very popular for investors, and for the average investor, it's a very safe and diversified investment to get into. I have covered how to invest into index funds in previous videos, so check out the channel to see a bit more information about that. But today we're just going to discuss the facts and figures behind how it's possible for the S&P 500 to reach a new equity high at such a fast rate. So guys, before we get started, if you do enjoy the video, please make sure you destroy the like button below, click that subscribe button, and we'll get stuck in. So like I said earlier, on the surface it's a fantastic result. However, the matter of fact is that unemployment rates are at an unprecedented high. So we've got global economies in shutdown. We've got some large companies across the globe unable to transact in business. So how is it possible that the index in its entirety is actually up for the year? Because it only has been 6 months since the initial drop in the S&P 500. If you look over the price action and how the charts have moved, it's pretty much been acting like a V. So you've had a large, steep, steady decline once the economic shutdowns happened across the globe, and then you've had a pretty strong and confident increase back to now what is new equity highs in the S&P. But you can't even go a day without seeing some sort of negative news in regards to the current situation and the current economic crisis. And on top of that, the lack of economic support which businesses and individuals are having at the moment across the globe. However, investors have still been able to push prices higher, and there's been extremely high level of confidence for all investors in the economy and in the stock market. So what's causing this high level of optimism? So there must be a reason as to why the S&P 500 is increasing at such a high rate, right? So although the S&P 500 does contain 500 companies, not all of these companies are actually weighted the same. So certain companies are weighted highly in the index to other companies, and this means that the proportion of which your money and the investment goes into this index isn't proportionally the same across all 500 companies. So the main reason why the index has moved so fastly is due to what's called the Big Five. So the Big Five companies are your Facebooks, your Apples, your Microsofts, your Amazons, and Googles. So these are the top 5 companies which are basically generating these extreme results for not only the US economy, but for the S&P 500 index in itself. So when you're buying into the index, like I said earlier, you're owning a little bit of all those 500 shares within the index. However, you're not owning the same proportion of each 500 of those shares. So when you split this up, 6.4% of your investment is actually going towards Apple, another 5.7% is going towards Microsoft, and you've got less than 1% going towards your smaller companies that are actually in that lower proportion of the 60% that are down for the year. So since there's such a disparity between the weighting of all of these companies, you can understand why the index has actually been at an increase for the year. So the returns for the index are actually going to be skewed towards these tech stocks which have a higher weight and a higher bearing on the returns of that index. So those top 5 companies that I named earlier, they account for 22% of the actual index. So when you buy an S&P 500 index fund, nearly a quarter of your money is going towards those 5 companies that I named earlier. And then the other 75% is going towards the other 495 companies within the index. So it's a crazy split. The weights are very heavily shifted towards tech stocks and towards these 5 booming companies. But I mean, if you are an investor like myself, Obviously, you aren't going to complain that the companies which have got the higher weighting are the ones which are showing those extreme levels of growth, not only in the short term, but they've been showing extreme levels of growth over the last couple of years. So that's obviously the main reason why there's such a higher weighting towards these firms. So with the current shift to online retail during the current pandemic, it's pretty easy to see why these companies have had such a massive return during the current situation. Especially companies like Amazon and Apple and Microsoft, where they're mainly store-based, they're all online retailers, their sales haven't really been affected that highly during the situation. If anything, companies like Amazon, the sales have gone through the roof because no longer are people going to a shop front to buy things. They're going online and logging into Amazon, and not only are you getting things delivered for cheaper, but you're physically unable to go and attend the shop front anymore. So these companies are adding a lot of value to individuals and to consumers, and therefore this has driven the stock prices of these companies up massively. Now, Apple's up over 60% for the year. Amazon's about the same. Apple's just about to release a stock split as well, just showing how positive the growth has been for these companies. So companies which may have been affected dramatically due to the current situations are still down for the year. You've got your travel industries which are extremely down for the year. Companies like Norwegian Airlines and the other companies that I mentioned earlier that are down 70% for the year due to a pretty much halt in business for those companies. However, due to the weighting of these stocks being much lower than those of Microsoft and Apple, but the returns of the index haven't been affected as dramatically if the weighting of all those 500 companies within the index were evenly spread. Due to the skew of rating, this has resulted in a rapid increase in price and new equity highs in less than 6 months' time. And if you look at the economy in a macro scale, you've got interest rates at an all-time low. So it's pretty easy to understand where the consumer confidence is coming from. Prior to the current situation, the economy, pretty much the global economy, was in a boom. There was a lot of growth, and due to the current situation, some companies have been able to adapt while others have perished. And the ones that have been able to adapt and add value have ultimately resulted in such a quick recovery for the index. With the current situation really not seeing any end at the moment, it's really hard to say exactly what prices will do in the future, and unfortunately I don't have a crystal ball and I'm unable to predict exactly where prices will go. However, if companies are able to continue to add value and continue to grow and adapt to mold for the current situation, then I can't see why this index in general won't continue to rise. Especially if companies like Tesla are eventually added into the index as well, this is going to add another level of growth for the S&P 500. So thank you so much for tuning in, guys. Comment below if you think that the index is going to continue increasing for 2020. Make sure you hit that like and subscribe button, click the notification bell. Thank you again so much for tuning in, and I look forward to seeing you next time.